So this is part 3 of 4 of Audit Tips. We are in the second half of Procedures to Reconsider, and we're continuing with prepaids. So here is our list of procedures to reconsider. We've done the first 5, and we're now going to start at prepaids and continue on. So let's spend a little time thinking about prepaid expenses, because this is a component of financial statements that often is over-audited, often a lot of time is spent on because we have the opportunity of doing it. We can just follow the accounting system through. So, take too long talking about this, but hopefully we'll understand at the end why I've talked about it for so long. So last year, and this year is similar, prepaids were $31,000 some in prepaid property tax and $11,000 some in prepaid insurance. So $43,000 bucks. The client has provided us with a copy of the property tax bill and the insurance invoice. That's very nice of them. And last year we recalculated this daily as opposed to monthly, which the client did, and found a $450 adjustment. We spent a bunch of time talking to the client about it, and they finally went, oh, okay, we'll make the entry. Now think about what the client was thinking. Oh, good grief, what are these guys wasting my time for? About $450. The chargeable time expended in that discussion probably exceeded $450. Anyway, this year's audit program says, okay, recalculate the prepaids on a daily basis. Figure out how many days in the year are left. Compare the total paid to the invoice and retain a copy of the invoice in the file. Trace the payment for property taxes and insurance to the check and to the bank statement. And budget is 25 hours. What's that, 3-4 days? This year we're going to add some procedures. Let's, I've noticed these in my auditing textbook, so we should add these as well, shouldn't we? Shouldn't we add these procedures? Determine that 2 signatures were on the check to authorize it. Compare the property tax bill this year to last year and obtain an explanation from the client for any changes. Normally the client says, well, the city increased taxes, and do the same for insurance. Well, the insurance company raised premiums. So the question is, what other procedures should be done? And perhaps from my tone of voice you realize probably none. But materiality is $250,000 bucks, and we have a component that is $42,000. So the risk of a material misstatement in this component is negligible. This is procedural, not risk-based auditing. We're just doing a bunch of procedures until we feel good. It's textbook auditing. We're doing every procedure in our auditing textbook. It's auditing by redoing the accounting. We're not being auditors, we're just running through the way the client did the accounting, not being an auditor. And we're auditing without thinking. We're just, let's just do it the way we did it last year. Don't want to think about it, it's hard. Now this produces maybe fabulous documentation, and as somebody that knows what they're doing will look at it and go, what are you doing? I suspect you're not properly planning the audit because you certainly haven't properly planned this. Now, you're not wrong. You're not going to miss a material misstatement here because there can't possibly be one, but what we have not done is assessed risk of material misstatement, which we should do before we even start, because if we'd done that before we even started and concluded that it was negligible and observed that it was roughly the same as last year, it's improbable that it could be any more. The only thing it could do is be less. So an analytical procedure, compare this year to last year, and it's roughly comparable. And would we expect property taxes to have gone up and insurance premiums to have gone up? Yeah. The invoice copies into the recycle bin or the shredder. Don't do that in front of the client, because they may go, gee, we did a lot of work to come up with a beautiful working paper for you. Maybe even throw away all their beautiful working papers and just retain, was this last year, this year, comparable. Write that on the audit program and we're done. Put that in the audit program That's all we're going to do. Change the budget to half an hour. And now we're being an auditor, not an accountant. Now we're assessing risk of material misstatement and designing procedures to be enough in the circumstances. Repairs and maintenance, another favorite of mine. Spending a lot of time looking at repairs and maintenance and seeing if they should be capitalized, or alternatively, spending a lot of time looking at capital additions, seeing if they should be expensed. So, first thing we got to do is consider risk of material misstatement. Now, maybe, notice the word maybe, a public company is more likely to capitalize than to expense. If it's on the edge, they're going to go, let's capitalize it. We have a revenue target to meet. That'll help us. Now, that's not a rule. That's a maybe. And maybe in a private company, they're more likely to expense it. They just don't want to be bothered capitalizing it. It saves tax. It's not a rule. I've seen the opposite. I've seen public companies that, man, they were very tough on capitalization criteria. They would not capitalize anything unless it was absolutely capital, and they didn't care about their revenue targets. So this is not a rule. You might think about it, but if you say, I have assessed risk of material misstatement as high because this is a public company, nonsense. You have to know about your public company, and you have to have done a risk assessment procedure to see what repairs and maintenance is compared to last year. And only then can you make a decision on what you should do. Now, an accounting aside, componentization. It's clearer in IFRS than it is in Canadian standards, but what it requires is when an asset is acquired, the company, the client must decide on acquisition what the components are and what their depreciation rate or period is going to be. So if you acquire a building on acquisition, you have to decide, am I going to separately capitalize the roof and amortize it over 20 years and the windows over 10 years and the carpet over 5 years? And if it's an airplane, do I capitalize the airframe separately from the engines, separately from the seats? And airplanes are interesting because while technical standards, aviation standards, will require the engines to be overhauled perhaps every 2 or 3 years, airlines are now deciding to capitalize or to overhaul them less than a year because of fuel efficiency. An overhauled engine is much more fuel efficient. You've probably seen, if you watch a really, really old movie and watch a Boeing 707 taking off, spewing all kinds of black smoke out behind the engine, that's an engine that meets FAA standards but is burning way too much gas. In the 70s, gas was cheap. Now it isn't. The airlines, when they start to see fuel efficiency going down, they overhaul the engine. And by the way, capitalizing the engine separately from the plane will often increase reported income. I'll let you do the math and see that. But if you do that, and these engines are expensive, and the overhauls are expensive, and the overhaul takes the engine right back up to being a brand new engine again. So the overhaul cost can be capitalized if you have componentized. Now, componentization actually often or maybe always does it. If you capitalize buildings, break all the bits out separately, and you got a lot of buildings, it will accomplish that. It will make your income higher. So replacing the carpets in a building where the carpets were not separately capitalized at the beginning, it is by definition an expense, even if it's very large. Ditto, they replace the windows. So if you're looking at repairs and maintenance and finding $300,000 more than materiality, windows capitalized, or expensed, they should be capitalized. That's a capital item. That's a long-lasting item. No, because componentization says if you did not separately capitalize the windows on acquisition, it's a repair. It's a repair, it's a repair, it's a repair. It can never be capitalized. Now, if you have a lot of buildings, income is often increased by componentization because what otherwise would have been a repair is capitalized. So depending on what the client attitude is, they will have made this componentization at the decision at the beginning. So if you're doing risk assessment procedures and you say to the client, hey, how come repairs and maintenance is up so much? Oh, we put in new windows. You go, okay, no risk of material misstatement. They weren't capitalized separately before, or carpet or anything like that. And you would say, I'm not even looking at it because it makes sense that it's up and it cannot be capitalized because of componentization. Fixed assets, same audit. Repairs and risk and material misstatement depends on the client and don't do every procedure. Do we recalculate depreciation in detail, or we do an analytical only? Now, a very small audit, it may be simpler. There is only one asset or two, and we have a little spreadsheet that calculates depreciation, and maybe even we're doing it and proposing an entry, so it's simpler just to recalculate depreciation. If you have a much larger client with many, many, many different assets and different depreciation rates, as long as you're concluding that risk and material misstatement is low, maybe an analytical procedure works, and we're not going to bother recalculating at all. So you always have to be careful. I can do a 100% substantive test, recalculate depreciation. Took 2 minutes. But if I want to do that on a very large client, it might take a day. Risk and material misstatement is low. I'm wasting time. I should do an analytical procedure. And you might have said, well, the analytical procedure would take longer than in my small client recalculating it because it's automatically done. So I'm over auditing, but it's so quick that I don't care. Additions, what level of additions to examine? Repairs and maintenance, what is the result of our risk assessment procedures? So we have to make a decision. Do I think that the client is likely to be capitalizing stuff that shouldn't be, or expensing stuff that should be capitalized? Decide in the plan, decide on the scope in the plan, and you may decide just to do an analytical procedure. That may be enough. So you need to clearly understand before looking at additions or repairs and maintenance. We need to clearly understand risk and material misstatement. So looking at repairs and maintenance, for instance, above $2,000, when performance materiality is $250,000, it's a waste of time, but pretty documentation. So maybe think about it, plan it, partner involvement. Maybe an analytical procedure is enough and save some time. Same audit or review query. The bank reconciliation has an $84 item. Please ask the client for an explanation. Several choices. Now, if the audit asks for an explanation of all items over $50, I guess it's a valid query. But then the problem is we have a badly planned audit. Why are we looking at $50 items in a materiality of $250,000 item? So if the audit program is sensible, this is a time-wasting query. Review query, same audit. Firm policy requires that a reference to a working paper is on the left and the reference from a working paper is on the right. Please adjust. This query is A, a waste of time, B, a complete waste of time, C, something for a training course. D, describes something that should be removed from firm policy. E, is something the reviewer should have been experienced enough to figure out themselves and fix themselves. Or F, the correct answer, all of the above. Purpose, procedure, and conclusion on every working paper. This is a waste of time and it betrays a badly planned audit. The purpose should be on the audit program. The purpose is to reduce risk of material misstatement to an appropriately low level, which is the purpose of every audit procedure. And the procedure should be on the audit program. Now, some people like to write multiple conclusions. I'm tempted that there should be for an audit a single conclusion at the end. I conclude that a clean audit opinion can be signed. Now, when you have an audit that has many different staff on it, and so one person is doing cash and another person is doing receivables, perhaps we'll have a conclusion for cash and receivables and fixed assets, which can then be accumulated up. But that's about as far as I'd like to go in terms of spending time. So this is something that's okay when we're doing an audit course. Purpose, procedure, and conclusion, okay, we're saying what we're doing, but in an actual audit where we're supposed to have assessed risk of material misstatement ahead of time and done procedures on risk of material misstatement, don't do that. So that's the end of part 3. Thanks for listening, and please see part 4.